Rahul Sharma is Head of Technicals and Derivative Research at JM Financial Services. He is now joining us. Rahul, hi, good morning. I have to start with Bank Nifty because that's the one where we're beginning to see big moves. Your thoughts on whether new all-time highs are coming here and when?
Yeah, good morning, Anuj. Yeah, it's a competition between the two indices. I think that is Bank Nifty clearly leading the show. If we see the constituents, some of these, names, especially the heavyweights, are at big cusp of, big breakouts. So I believe that Bank Nifty should be the first one to head towards the 41,800 mark, which was the previous all-time high, and Nifty should not be far behind. Now, the rationale is simple that, around 50% of the Nifty constituents, which is BFSI plus auto plus consumption, is already quite super bullish. So these indices have already broken out. The remaining 30% of Nifty constituents is moderately bullish, which constitutes remaining sectors like telecom, oil and gas, consumer durables, power, and pharma and IT is something which is languishing in the Nifty pack. So we believe that this is a place where this is actually a start of a new mega bull run where we are targeting 21,000 of the Nifty in possibly the next 6 months or so, and we should see relative outperformance continue from these sectors. Now, IT is one sector which has been a laggard, which if this turns around now, that could also add impetus to the overall scheme of things, and we should see markets firing from all guns. So as far as the short-term view is concerned, I think 18,600, the previous all-time high on the Nifty, should be done in a month or so. As far as our 21,000 target is concerned, we're optimistic that this should happen in the next 6 to 8 months, conservatively 12 months, but I think 6 to 8 months is a good amount of time for that target to be done.
Okay, so 21,000 on the Nifty, here it comes in the next 6 to 8 months. That's what Rahul Sharma is indicating. Rahul, good morning. So you said that banks, are going to lead it from the front and IT has taken a back seat, at least for now. Any other sectoral trends that you're looking at? Who could be the leaders that will take the markets to these levels?
Yeah, so, two sectors clearly come to my mind when we talk of, which would be the alpha generating areas of the market. One is clearly the consumption theme. Consumption as a sector is expected to do very well. The festive season has been fantastic. It has, in fact, started off fantastically well. And with overall good monsoons, we think this sector should only do well. The sectoral index, which is the India Consumption Index, is already showing signs of leadership. So we believe that this is one area where more money can be made. But the biggest money, I think, will be created in the small cap basket. If you see the small cap 100 index, it has just crossed its 200-day exponential moving average. And there is a lot of headroom there in mid caps, in small caps specifically. So, in the last few weeks, mid caps and small caps have come out of their consolidation zones, and the risk appetite is coming back in the retail and intra HNI segment of the market. So we believe that the biggest alpha will be created in small cap area. Quality stocks, in the small cap 100 index can be considered. In fact, a basket of stocks is something that we recommend to our clients to invest in, especially given the overall resilience of the market. So, we have an internal strength, and second is the relative strength that we have as compared to the broader markets. Last 2 weeks, we have been defying gravity as far as US markets are concerned. Now that they have turned, in fact, the last time US markets turned around in June, we saw a 1,100-point rally in the next 1 month in Nifty. Something similar can happen over here where Nifty can take out the previous all-time high in the next 1 month. And we believe that consumption and small caps are the two areas where significant upside can be expected in the medium term.
Right. Hi, Rahul. Let's focus on a couple of names and stock-specific names. The move that's been baffling from the cement space has been Ambuja Cements. That's been an outperformer from that space. So where is that stock headed? And from the banking space, which is sounding rather bullish on, Kotak Mahindra Bank has been a relative underperformer. You believe it's time for this one to fire? What are the targets on both these two?
Yeah, so Ambuja is one of our top picks. In fact, we have recommended to our clients around 410 levels. We believe that this is just the start of the overall, bull run that this stock has entered into. This is one of those phases where the stock enters into a blue sky territory. In fact, there are fundamental reasons to it, given the increasing synergies between the Adani group of companies and the savings that they will do in wholesome loyalty. I think the margins are set to rise and the stock is set for re-rating. Technically, whenever stocks get into such blue sky territories, the best thing to do is buy them and keep on riding them with trailing stop losses. As an immediate target, we're expecting 500 rupees to be tested anytime soon. But positionally, we are optimistic of a target of 600 in the next 3 to 4 months for Ambuja Cements. If somebody is looking to buy fresh, the best thing to do is buy it with a stop loss of 420, and still there is a decent upside that can be expected in this stock. As far as Kotak Bank is concerned, now Kotak Bank has been attracting a lot of open interest in the last few weeks around the 1900-1950 zone. In fact, this is one of the only private bank which has not participated equally as far as some of the other private banks have done. And I believe there is a very strong case for short covering here, a very strong case for a catch-up rally over here. And as far as levels are concerned, I think 1950 and above, this stock should head into a strong momentum zone. And above 1975 is where positions can be added. Overall, we are optimistic that 2130 to 2200 is where the targets are expected for Kotak Mahindra Bank. It can be bought with a stop loss placed at 1850. So, banks are here to, the rally in the banks is here to stay. It's all
Rahul,
about, cherry picking. And
got that. Rahul, what about Infosys and ITC, two other stocks that I wanted your view on?
Yeah, Anuj. So in IT, the good thing about the IT index is it has honored the previous week's lows. In fact, the last week's lows have not been broken. A lot of negativity is already priced into the prices, into the current levels. And as far as Infosys is concerned, I think as far as this week is concerned, it is closing on a very strong note. And as a level is concerned, I think 1600 is somewhere where we see this bounce back coming into. So we are optimistic that IT should see a bounce back from here. Although out and out rally is something that we need to wait for further data to confirm. But as of now, I think with maybe a 1450 stop loss, we can add logs over here for a positional target of 1600 on the upside.
Okay, we will leave it at that. Rahul, thanks a lot for joining in and giving us an update. That's 21,000, the target that he's looking at on the Nifty in the next 6 to 8 months. Well, that's some optimistic views coming in. But we're not done with tracking technicals just yet. Mitesh Thakur will join in for some technical trades and tell you how to profit from the market today. Stay tuned for that.